Regardless of your position in finances, I'm going to teach you a fast and easy way in phase one of the treetop banking system, which is a two-part series where I'm going to explain you how to pay down debts extremely fast. Pay attention, try to keep up. All right, so first things first, you need to figure out what your cash flow is. And in order to get your cash flow, I got a video where you can check out to figure out what cash flow is. In today's example, we have an income of $3,500. We got expenses of $2,711 that includes debt and non-debt payments. I'm going to explain what debt and non-debt payments are. For a lot of you who are already hip, you know what the difference is. But we got a cash flow of $789. Remember the video, income minus expenses equal cash flow. That's all that is. Now, what we're going to do with the cash flow, we're going to talk about in a second. But we need to understand what debt payments are and what non-debt payments are. So debt payments are something that you can pay down to zero. So you got a bunch of credit cards right here, student loans, personal loans, cars, all of those debts you can pay down to zero and they will be gone. They will add back to your cash flow. Now, non-debt payments. Non-debt payments will be rent, utilities, internet, gas, car insurance, food, subscriptions. You need to be able to differentiate or separate debt payments and non-debt payments. Once you separate debt payments and non-debt payments and you have your cash flow, you're ready to do the advanced debt pay down that we do in phase one of the treetop banking system. Now that we've separated debt payments from non-debt payments, let's look at these debt payments. For instance, we got a Bank of America card, it's got a $3,500 balance on it. It's $86 a month. All of these numbers are monthly costs. Now remember, when you have your cash flow, it's income minus expenses equals your cash flow. But this is taken from your cash flow as well. So how do we get this back? Duh, we pay it off. But how do we pay it off the fastest and most efficient way? We start with the lowest balance. Why do we do that? Because we have $789 that we can use to make extra payments on this stuff right here. But I don't want to leave you with no money in a month because this is money that you have left over after you pay all your bills. So what do you do with that? You can't go out. You can't do nothing now. Remember, we did non-debt payments, so I got your food in there. I got, everything else. All your bills are paid, but some people want to go out. They want to do something with themselves. So I thought about that, right? But this is what we're going to do to fix it. With your cash flow, we're going to do a simple calculation. We're going to take our cash flow, which is $789, and we're going to times it by 0.6. Why are we doing that? Because we're going to take 60% of our cash flow. Now, why are we taking 60% of our cash flow? Because we want to leave just a little bit of money. Now, it doesn't have to be a little bit. You can use 30% of your cash flow, but for my example here, I always use 60% because I want these debts to get out of there fast because I'm going to get this money back. I'm going to get all of this and add it back to my cash flow, and I'm going to do it in a way that doesn't really hurt. But some people, they need extra money, so don't use this 0.6, use 0.3. But we're using 0.6 for this example. If you follow phase one of the treetop banking system, we always use 60%. I know it's kind of strict, but like I said, you can use 30%, but then you wouldn't be following me. You wouldn't be doing what I do. Now that we did our calculations, 60% of 789 is $473.40. Now this $473.40, we're going to use this to pay these payments. Now we're going to make the minimum payment. We're going to make those minimum payments, but we're also going to use this money to get rid of one of these debts extremely fast. Now, what do you do with the extra money? Probably asking, what do you do with the extra fund? What's left over from this 789? All right, so now we got the 789. We took out our extra money that we're going to use to do the phase one of the treetop banking system, to smash out the debt. We got $315 left over. This $315 left over you can use for anything. It doesn't have anything to do with this. It doesn't have anything to do with the debt payments. You take that $315, put it in your pocket. You want to go out, you want to get some brew, you want to drink something, you want to smoke something, whatever you want to do. Take somebody out on a date, take yourself out, go somewhere. It's not a lot of money, but we're going to get you the money back. Just pay attention. All right, so now we got the $473.40. What do we do with that, right? So remember, you take the smallest debt and you go after that one first. So we're making the minimum monthly payments because it's already included in our expenses. But what's the smallest payment? Discover. So this is the smallest payment right here. This $35. We can kill this debt very fast, right? Because it's $503, right? So let's see how much we can do. We got $473.40 that we can throw onto that Discover. Now the balance is only $503. So if we put $473.40 plus 35, what is that? $473.40 plus 35, that's $508. It's $503. 35 minimum payment. So just by following this system, you take that extra money that I showed you how to get, you make that minimum payment, which is going to be $508.40. You only owe $503. So you're going to have $5.40 left over at the end of the month, but you just wipe wiped out this right here. No more Discover. That's gone. 1 month. That first month you wiped out some debt. Let's get him out of there. So now that the cash flow is $789, remember $789, we recouped $35. So now $789 plus $35. What's our new cash flow? $789 plus $35, $824. $824. So within that first month, you wiped out the debt, you increased your cash flow to $824. We got to do the calculations all over again. But basically, get your cash flow, take 60%, always make your minimum payments, and then go after the lowest monthly payment to get rid of it. This is the first month. This took 1 month. 1 month we did this. Now, what's next? We got a Cap 1 payment of $47. Let's go after it with the new cash flow. Now remember, we got the $35 back, so our new way to attack these debts is now increased to $508.40. Now what do we go after? Let's see. Cap 1, $47 a month. We owe $17.56 on Cap 1. How long is it going to take us to pay off Cap 1? Let's see how long it's going to take us. Paying $508 a month on top of the $47 that we're going to spend. So basically we add this $47 to the $508 because this is automatically going to come out of your expenses, right? Now, since it's coming out of your expenses, it will equal up to a total payment between $47 and $508.40. So let's add it up. $555.40 is what's going to go onto the Cap 1 every month until it's gone. And we're going to recoup that cash flow when we do this. Let's see how long it takes. After month 1, you're going to take that $55.40 and you're going to subtract it. From $17.56, it's going to be $1,200.60. Month 2, we're going to do the exact same thing. $1,200.60. That's the balance from month 1. We're going to subtract $555.40. Our new balance is $645.20. Let's keep going. Month 3, $645.20 minus $555.40. We got a balance of $89.80 in month 3. It's been 3 months. We've always made our minimum payments on everything else because it's included in our expenses. Now, what do we do next? We got $555.40, so you know what's about to happen next, right? Month 4, we make a payment of $89.80. Remember, it was only $89.80 left, so we don't need to make the whole payment of $555.40. We just make $89.80, and guess what? Zeroed out that balance. Let's zero it out, baby. It's gone. Now what we do? We just gained another $47 in cash flow. It's been 4 months. You paid off $1,756. You paid off $503. We got 2 debts out of there. Now we got an extra $47 in cash flow and an extra $35 in cash flow. Let's keep it going. Well, you know what? I think you got the concept now. Your boy Treetop Chris checking in. Peace and love. Peace, family. Boy Treetop Chris checking in, and today we're going to talk about debt paydown. Yes, debt paydown. I know a lot of you have been paying your bills normally. You got big money, you got small money, you building, you're already built.